it looks like the interest rate trade seems to be over. That really has been weighing on the sector in the beginning part of the year. The problem is there are opportunities, don't get me wrong. The problem is a lot of these companies are under a lot of pressure, and I still think numbers need to come down. So that could put some pressure. I understand the risk aversion and what's going on with all the tariffs, et cetera, but as earnings start coming out, I think there's going to be a rude awakening for some of these names.
Some of your picks, Coca-Cola, it's actually been an outperformer in the group. Cody, not too hot. Altria, not too hot either. You sticking with them?
Yeah, well, keep in mind on Altria, we actually upgraded the stock around 55 not too long ago. We were actually had an underperform on the stock for about a year and a half. So we think that the risk to reward for Altria looks pretty good. We think Marlboro share trends are going to improve. And, you know, honestly, tobacco stocks don't deal with the same problems all these other consumer staples companies deal with. Rising commodity costs, no pricing power, and retail evolution online. It's illegal to sell cigarettes online, so they don't really get disrupted in that way. Yeah. On Cody, just to finish off that thought, you know, we were negative on Cody for quite a while. This new CEO and CFO came in about a year and a half ago, and they've made a lot of changes. We think we're at the very early inflection point of that business and that company starting to do better.
You don't cover Conagra or Pinnacle, right?
I don't.
So there's news about them today, about deals there. More of the same of what we're seeing in this industry, right? These guys feel like they got to get bigger in order to get scale and offset some of these trends that you inferred, but...
Yeah, exactly. I'm surprised we haven't seen more, actually, especially as the rate environment has been so low. So the reality is these companies, a lot of them are going to have to combine. They're going to have to leverage some of those cost savings to reinvest back into their businesses. And honestly, all of these companies should be able to be the disruptors. They have the balance sheets, they have the resourcing, they have the R&D, but they're all too scared to take those short-term earnings hits to really adapt to where we are right now.
Constellation Brands recently made an investment in cannabis. Do you expect more companies within your universe to do the same?
Absolutely.
Which ones?
You heard
is it
Molson
spirits?
Coors.
Is it tobacco?
In the press recently, Molson Coors has been discussed as actually looking at some Canadian cannabis firms to partner up with. I think if you think about the occasion that cannabis will go after, I think you're going to see basically the beverage alcohol category be pretty involved in looking at the space over the next
Very quickly, you said you expect more big deals, more deals of scale. Is that really more effective to grow than more spin-offs and getting smaller?
It depends on the deal. You know, we just put out a big Futures 2025 piece today, and sometimes these kind of out of the blue alliances can really catapult you. I mean, look what happened with Amazon and Whole Foods. No one was expecting that to happen, and that really disrupted the market.
But nobody is Amazon.
Well, that's a good point. But I don't necessarily think big deals are the answer. I'm just saying I think a lot of these companies have no option but to do big deals because they're not willing to divest as much as they should in order to see that dilution in earnings, and so that's a problem.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.